kind of what things are sustaining and what things are these kind of temporary dynamics. I mean, we had the we remember like going in a quarter before COVID, and we had a whole plan that had to kind of get rewritten because of COVID. Then you had the kind of troughs of COVID and the peaks, and now obviously coming into a macro recession environment. So I think it's been difficult probably for anybody to really kind of model this stuff out. But for us, the strategy has I think only been reinforced at each of these kind of stages around our value proposition, what we're going to be focused on, how we're executing. So we've been through this kind of basically, I'd say most concretely kind of 3 or 4 year journey to really expanding out our multi-product suite and going much deeper in security and compliance, much deeper in data governance, expanding into workflow, collaboration, e-signature, and then of course doubling down on our open platform and our APIs. So we think about the business as, first and foremost, just, from an innovation lens, how do we expand the value proposition? How do we cover more of the surface area for customers, go after a larger TAM? Secondarily, how do we package that up so we can sell it efficiently to customers? So 5 years ago, we were in a mode of selling each individual add-on product to customers kind of one at a time, very inefficient, fairly costly sale, not kind of great for the productivity metrics. So we package that up into our multi-product suites, now most successfully with Enterprise Plus. So that's on the go-to-market side. And then the third kind of component is just also driving a level of efficiency and bottom line results that we think put us in a fairly and increasingly kind of best-in-class position of margin profile. So that's been the journey. So product expansion, simplifying it through our go-to-market lens, and then really driving strong bottom line results as we build this more kind of sustainable, durable model of healthy growth rates but improved margin profile.
Got it. I wanted to, obviously, you reported earnings on Tuesday, and wanted to dig, a little bit deeper into the trends that you were highlighting in that, around lower seat expansion, that being a reason driving lower NRR. Are these new trends that you've seen within the business, or is this more of a continuation? And just talk a little bit about whether that's, have those impacts become more intense as the quarters have gone by?
Yeah, I would say more or less stabilizing with some incremental pressure that we saw in U.S. commercial and EMEA. So that was the kind of added pressure element. But I'd say the overall kind of tone of the conversations and more of the kind of qualitative color on the quarter looked pretty similar to what we saw at the end of Q3, what we saw throughout Q4, and then kind of Q1 being a continuation of that. But just purely model wise, we wanted to adjust things because of what we were seeing in EMEA and SMB being slightly incremental to that. And I think everybody's pretty clear on the general trends. I mean, every company on the planet is looking to save money wherever they can. That's putting IT budgets under pressure. So companies have to sort of figure out what's the most mission critical areas of investment, focus on that. There's not as much kind of headcount growth as we saw kind of in that COVID era of just rampant hiring and a pretty dynamic economy in a lot of sectors. That slowed down a little bit, largely driven by I think kind of the inflation interest rate combo there, and so that's putting pressure on the total spend levels. But overall we still see a lot of pockets of where it's healthy on a relative basis, and we're mitigating those headwinds as much as we can.
Got it. That's clear. And as you look at your full year guidance, how should people think about the prudence built into this guide? Obviously there was a dynamic with FX. So could you talk about why that dynamic is maybe unique to you, and what are the different components around that guide?
Yeah. So I think there's two components. I think probably some healthy portion of companies have an FX dynamic in general this year, given the U.S. dollar appreciation in the past kind of 12, 16 months or so. And then we came into the year guiding to a particular number with a spot FX rate as of our guidance. And in the subsequent 3 months, the yen depreciated further from where that number was. That didn't happen as much on the euro. And so I think we're kind of a little bit unique, having to have additional FX headwind that we had to call out for this year. Just not as many software companies saw that kind of delta in the same way. Mostly just because of the scale of our Japan business relative to our businesses is sort of outsized. We have a very, very successful, highly dominant position in Japan, and so that kind of when there's yen fluctuation that shows up on our end, I think disproportionately to other SaaS companies. So we call that 50 basis points of additional FX headwind for the year. So we had to adjust guidance by about $5 million for the full year range. Part of that coming from FX, part of it coming from the SMB kind of EMEA headwind.
Got it. Obviously you laid out some long-term targets during your analyst day in March. Could you talk about the main growth levers that can get you to the, let's say, 10 to 15% top line growth targets?
Yeah, and it's important to put in context, basically like almost the entirety of last year, we were actually the entirety of last year we were in the range of our long-term targets on the top line. And so we think that these top line targets are very achievable, with our business model, with our product portfolio, with our value proposition. And right now we have these macro influences that are adding pressure to that. But in general, the kind of 10 to 15% sustained growth we think comes from, you can kind of think about it in sort of three fundamental ways. So the first is we have to drive more seats of our product. So that gets you kind of the horizontal expansion within an enterprise. We have about 7x upside of seats within customers that we already have. So quite a bit of seats that we can sell to the existing install base. The second component is price per seat uplift. We've consistently seen a pretty healthy year over year price per seat improvement, and that's driven by moving customers up higher tier plans. That's only going to continue over time. About half our business still can go into our Enterprise Plus plan, and we will have additional plans in the future that we layer on top of Enterprise Plus. And then finally, you have just continued kind of retention rate, net retention improvements that will be driven by just greater stickiness of the product and just more depth of features. So you kind of take those three. Those are the strategic drivers of our business that then shows up in I think that sustained 10 to 15% growth rate plus just all the new logos that we'll be able to go out and acquire as well.
Got it. And while you're getting to that target, you're also embedding a pretty decent amount of operating margin leverage.
Yeah.
I guess just talk on that side, on the bottom line, like what are the main sources of leverage, and how do you plan to unlock those, and will AI investments potentially dent those in some fashion, if you will?
Kind of last thing first, there's no plan for AI investments to dent the margin profile, and I can get into kind of some of the specifics of why. But our architecture is sort of like perfectly built for this moment in AI. Based on how we built the right abstraction layer to AI models, we're largely going to be kind of fully running in the cloud in the coming quarters. So our ability to connect to any AI model in the cloud is very efficient. So we're kind of well built for this kind of dynamic. As it relates to the overall margin profile, we kind of call that 32 to 35% operating margin in our long-term plan, which is kind of a 3 to 5 year plan. That'll be come from some mix of gross margin, which has continued to trend upward in the past couple of years. That'll come from just natural efficiencies that we get in areas like G&A and sales and marketing, as you just continue to drive incremental productivity. And then on engineering and product development, while at the same time adding a ton of capacity in engineering, we've been able to get really efficient on the cost side because we've added an offshore location for building out engineering capacity. So that's really kind of helped us get more leverage and more scale. You add those kind of components up, plus our just general cost discipline. That's how you get to the 32 to 35.
Got it. So you brought it up, I guess. Let's deep dive into AI.
Didn't you bring it up?
I did.
Okay.
But I guess could you just give an overview of Box AI and the status of the design partner program?
Yeah, so Box AI we announced in May, and what Box AI is, it's our both platform and some of our end user product will be branded as Box AI as well. But what it is it's a platform that connects your enterprise content securely, compliantly, and privately to leading AI models, starting with OpenAI's GPT 3.5 and 4. But we also announced a partnership with Google in the quarter as well. And what we're enabling is the ability to take your unstructured data, your content, so your contracts, your marketing assets, your project files, your HR documents, and ask questions of that data leveraging AI. And so really for the first time in history, you can take these unstructured data assets in the form of files that are pretty opaque by nature to computers. They're you can look at them as a user and read them, but a computer doesn't really know what's going on inside them for the most part. And now we can, for the first time ever, interact with that data through a natural language interface. And so the big breakthrough for us is, really since the kind of creation of the database, and even before that, you could ask questions of your structured data. So you could say, how much inventory do I have in my business? How many customers do I have? What's my balance sheet look like? Anything that could be in a database, you could ask questions of. You could never do the equivalent for your unstructured data that was in your content. And about 80% of the enterprise data that's just ever created is unstructured data. Now, some of that's email, some of that's Slack channels, but a lot of that is your files. Again, your marketing assets, your contracts, your HR documents. And so we can take that content and make it so you can reason over it, in a programmatic or end user driven way, and start to understand the information that's inside of that content and really kind of extract value. So Box AI is all of that, and we will introduce capabilities in the product over time in a variety of kind of fashions. But it's really about unlocking the value and unlocking the intelligence that's inside of the data that you already have. We think that makes Box an even more compelling place to manage content, to secure content, to automate workflows from content. And ultimately, we have a huge benefit because we're platform neutral. So we don't really care where the AI comes from. It can come from OpenAI, come from Google, come from Amazon. we want to leverage the best-in-class AI models to basically make our customers, incredibly successful.
Got it. And any updates on like when this will be generally available, and how are you thinking of monetizing this? Will this be part of the suites strategy that you already have?
Yeah, so consistent with some of our other new product entries like Box Sign and other features, the way we kind of think about it is they'll probably, this is all kind of very early. We have not announced pricing, to be very clear. We're just starting to do our early rollout to kind of these alpha beta customers with our design partner program. But the philosophical approach we'd like to take is make some of the functionality available to customers included in their plans, because there's some use cases that we just think are very powerful. We'd like to make them really easy to interact with. And then there's use cases that are either much more advanced or they have more kind of high volume characteristics to them, which ultimately means there's either more pricing power on our end or it's more costly. So we have to reflect that cost in the product. And we'll charge for those use cases as well. So think about Box AI more as a platform capability that will sort of stratify different plan types that we have.
Got it. And then I guess a more broader question, we're all grappling with this, I guess. Who, in your opinion, how do you think the winners and losers will get shaped out in this new AI world? Would be interested in getting your thoughts on that.
Yeah, well, I'd say NVIDIA is the winner. So that's like the Uber winner, and then it's kind of the rest of us. And I think our best way of thinking about it is, where do you have what is AI really, really good at relative to what other technology was good at? What it's really, really good at is applying near human level intelligence with a lot of asterisks against sort of some degree of information or data that you kind of give it. And even when you go to ChatGPT, you're giving it data by asking it a question. But that's only so useful because you want it to be able to answer questions based on existing stuff that you have. So the question is, where are use cases very potent where an AI, where sort of human level reasoning applied to your information can produce business value? And you kind of look at the entire software landscape, and I think there's some players where it's just like so dead obvious, and there's some that are kind of maybe more neutral, and then maybe some it's more disruptive. We sort of firmly think that Box is in the dead obvious category. We store tens of billions of documents in our platform. Every single one of those can be now better understand leveraging AI than any other technology we ever could have had for understanding that data. And so the really exciting thing is we think about use cases like imagine you had a collection of sales documents that you wanted your sales team to go and read through and be able to understand so they can be better sellers. Well, that's great. And you go through a training exercise, but then 3 months later, they kind of forget everything that was in those documents. So they kind of go back and they have a question. Well, today they're going to go ask a colleague that question. They're just going to say, hey, Sally, what's the price of this thing? Or how do I sell this, product to a customer in this industry? And a person's going to have to go and answer that question. Well, the answer actually is also in this data. So if you could create an interface where people can go and say, hey, I'm selling to this customer, what's the right way to sell this product? Or what's the price of this product in this industry? All of a sudden, you can now have AI answer that question based on the existing content in your enterprise. You didn't have to train any AI model. You didn't have to go and scan through 50 systems. You just gave it content, and now it can answer these questions. So for us, we get really excited because we could never produce that. We could never do that for a customer before. Before you would have to go to Box and you would search for a file, and maybe you'd guess the file name right or some of the words in the document. Now you don't have to do that. All you have to do is just ask a question, and if your question has anything to do with the substance of the content that's inside of the Box environment that you're using, we will answer the question, with some asterisks, but basically that's the kind of results that we're getting. We think that's a breakthrough in how you leverage your knowledge, how you leverage your enterprise data, much more so than many other kind of use cases where you could be bringing large language models to the enterprise.
Got it. Wanted to open it up if any of the folks in the audience have any questions. But maybe I'll ask one more on the the competitive dynamics. It's always been a very competitive space, but you've always had that in terms of the hyperscalers always being there. Does the work that Microsoft is doing with OpenAI, does it make OneDrive more accessible to a broader set of customers? Anything you've seen change in terms of the competitive positioning relative to Microsoft?
No meaningful change in the competitive position, and if anything, probably this creates another avenue of partnership with Microsoft. So for instance, last week they announced some new Copilot features, in particular Copilot plugins. Box was one of the named kind of new partners in that effort, and that's going to be a world where you'll be inside Copilot, whatever the form of that is, and you ask a question, and if Box is one of your connected kind of repositories or plugins, you'll be able to get answers from your Box data set. So we think that we'll plug into a lot of this software. We haven't announced anything, but there's only a few, real hyperscalers where you can run AI inferences on, and Azure is one of those, and Azure is the way that you use OpenAI, and we have announced a partnership with OpenAI, so you can imagine that becomes another area where we work with Microsoft over time. So I think there's actually probably more surface area for us to partner on. There will be definitely kind of competitive skirmishes, alongside that, but for the most part, we're going to be a strong partner of Microsoft and Google and Amazon and the other kind of the hyperscaler, kind of collective there.
Got it. And then as you think of Box, say over the long term, let's say 5 years from today, how does Box look? It's besides just the AI stuff. What do you see in terms of the business over the longer term?
Yeah, I mean, we're just unabashedly extremely passionate about content and about the value of that data. So we look at the TAM of this market as somewhere in the order of kind of like $70+ billion of spend in the next couple of years. We'll go into, if you just think about the data stack, you've got storage infrastructure, document management software, workflow engines, collaboration tools, e-signature technology, and then kind of vertical line of business apps around content. So that all of that combined is like a $70 billion market of global IT spend on things that content is sort of extremely related to. We think we're building a product portfolio and roadmap that addresses a large portion of that TAM, which then by virtue means that our opportunity is kind of unbounded, from a spend standpoint. And then it's really just about our ability to innovate, build the right kind of sales capacity and motion to go after that, all doing that with a level of efficiency and kind of bottom line framework that we've laid out.
Got it. And maybe one or two things that people from the outside might not be fully appreciating, that you see on the inside.
Well, I think it's just super top of mind because of obviously this week in the past couple of months. But I will sort of underscore the AI point. I think we've been extremely compelled by and pretty happy with the kind of response we're getting from customers around them lighting up around the potential use cases that they have. I called this out on the earnings call, but we have a customer in the media space where they basically sit between various projects, including kind of film projects and TV projects and whatnot, and external advertisers that want to sponsor various things. And it's a very sort of like relationship, tribal knowledge kind of business to figure out like how do we connect this advertiser with this project. And so when we showed them our first version of Box AI, instantly they're like, holy crap, well, could we give you all of our project data, that we have, and then we could have a search interface and say, okay, we have an auto sponsor, what projects relate to automotive. And that was just like not something that they had a digital system for before, that now for the first time ever, they could connect their content into a revenue generating opportunity for their business. So I think it's going to open up people's minds to all of this underlying rich value that we have in our proprietary data in the enterprise. And you're going to start to then see customers eventually care way more about their content architecture. And it's not going to be, kind of reasonable or acceptable to say, okay, well, my files can just be in email and file servers and document management systems, and I'm not going to kind of make sense of all that value. We think that's going to cause people to really start to think differently about their content.
Got it. One last one, I guess, around the Japanese business.
Yeah.
Just talk a little bit about the durability of growth out there. What you see out there.
Yeah, so I would say it's a very durable business for us. We have been uniquely successful in Japan. Some of it is just idiosyncratic. We hired kind of the exact right team on the ground 10 years ago at the start of basically a Japan kind of cloud super cycle. So right team, right time, right partners with the right product. That all kind of came together, and that let us just accelerate growth in that market. In the early stages. So we've seen just tremendous growth in the Japanese market. The durability we believe is extremely strong. The growth rate will have to come down just by virtue of how large that is as a business for us. So I think you'll see the kind of just percentage growth certainly moderate. But if we look at the industries that we're just at the kind of scratching the surface of, financial services, government agencies, even global manufacturing in Japan, still substantial upside. So we're super happy with the business.
Got it. We'll leave it at that.
Cool. Thank you.
Thank you so much.